These were all the trades we took this week using the ICT Liquidity Trading Strategy. The only difference between the retail people who were taking loss after loss in the trading compared to us, because we can identify the liquidity exactly as we access to the hidden information where the retail people can't have. We access to the special timings. You can watch the timings here. These small rectangle boxes are the timings. You can see every trade we took is in this timing zone. Every trade, this sell, this buy, this buy, this sell, everything is defined as the timing. Normal retail people never know the importance of the time. So in this video, we will exactly show you some of the important nuggets of the liquidity trading strategy. Watch the video till the end. These were the most important liquidities of the forex market. The first one is previous test highs and previous test low liquidity, and previous test internal liquidity, and it is previous test session liquidity. So what is the previous day high and previous day low? If the day is like this, let's say this is Monday and we are entering into the new day. This is Monday and this is Tuesday. The high and low of the Monday are very high probable reversal points. If the price took the liquidity at the high, there is a high chance of reversal in the Tuesday. So this is what I mean by previous day high and previous day low liquidity, because lot of retail people and smart money people will have the sell positions here. So their stop losses will be just above the highs and lows of the day. So that's why these points are very high reversal points. The percentage of getting a reversal after this liquidity is taken out is more than 80%. So this is very important. And the second important type of liquidity is previous day's internal liquidity. Apart from the previous day's high and previous day's high, if there is a clear structure in between the previous day's high and previous day's low, it is called as the internal liquidity. From the internal liquidity, we can get SMC liquidity. Lot of smart money people will have their positions here, because these smart money people and retail people don't know the mechanics of the market. They don't understand the mechanics of the market. They just trade the patterns, like they will wait for the break of the structure patterns or like that. We don't trade the patterns. We trade the liquidities. Liquidity is far above from the pattern trading. So here, smart money people will have buy positions. They will think this is the break of the structure and they should buy here. They have a lot of silly reasons to buy here, and their stop losses will be just here. Stop losses will be just here. So the algorithm just take their liquidity and then reverse. So this is also very important type of liquidity. And also the third important one is session liquidity. Let's say it can be the Asian session or it can be the London session. This can be Asian session, okay, or it can be London session. So these are the most two important types of session liquidities are available. Most of the times, if the Asian liquidity is taken out, we can get a reversal. More than 60% of the time, we can get a reversal once the Asian liquidity is taken out. So now I will explain the mechanics why the market will reverse after the liquidity is taken out, because nobody will tell you why the market reverse after the liquidity is taken out. They will just tell find the liquidity, find the liquidity, find the liquidity. But in this video, I will exactly explain how to identify the liquidities and everything. So normal retail people will have some patterns like this, and SMC people will have some patterns. They will wait for the order blocks and everything. They will have order blocks like this. They will trade order blocks from here. But in the reality, the market doesn't contain a structure. The market moves from the liquidity point to the liquidity. It is completely false. It is completely false. The real market, if you have some experience, you know it moves like this, liquidity point to the liquidity point. There is a lot of difference between the charts they show and the reality of the charts that happens every day. Every day, the liquidity will be the key. After the liquidity got taken out, it will reverse. The main reason is for any transaction to take place, in the marketplace, there needs the money. Assume you went to the supermarket and you bought some bread and you came out of the supermarket without paying the money. Is it possible? Nothing. Every transaction to takes place, there needs a money. The money here is liquidity. Simple. There is money here. That's why this whole move happened. And there is money here. That's why this whole move happened. You should think the every move as the transaction. For every transaction, there should be liquidity. Every move is the result of the liquidity takes place. And the timing also very important. We have some special timings which we use in order to know whether this move can sustain a longer term, whether it's a high of the day or low of the week, like that. It's all dependent on the timing and the liquidity aspects of the trading. No retail people know this type of stuff. They don't even know the importance of the timing. They will just trade patterns to the patterns. They will have some patterns like this. These patterns are always targeted from the get-go of the markets are invented. These patterns are invented like this because they want to engineer the liquidity. Think the market as the fish tank. They need people to put their money in the marketplace. Then only the market makers can take the money out of their pockets. So that's why they should print these type of chart patterns. If they don't print these type of chart patterns, the normal retail people don't put their hard-earned money in the forex market. If you know the types of liquidity patterns and everything about the timing, you can't unsee it. It will be like a Nikola Tesla number, like 369. If you see it, you can't unsee it. These are some hidden secrets that are everybody ignoring. We have a 9 point checklist while taking any trade. Me and my students will take the same trades. Whether the 9 point checklist is completely aligning each other, then we will take the trade. Otherwise, we don't take the trade. This 9 point checklist consists of the liquidity and money levels and the order blocks and the smart money traps and retail traps, everything. This 9 point checklist consists of everything with the entry patterns. So whether as retail people and smart money people, they don't have any strategy. They just see some strategy in the YouTube and they think the price will respect the strategy and it will move to the moon. It's completely, yeah, the price never move like this. You should have a proper set of strategy and rules in order to profitable in the markets. This game is completely probabilistic environment. The edge I'm going to show you has the highest win rate than compared to any other edge available in this industry, because the edge I'm teaching you is refined over the 5 years. I'm trading this liquidity concepts for the 5 years, and I know which liquidities are going to play well and which money levels are very very best in the marketplace and the timings, etc. A lot of things to discuss. And if you want to exactly learn my strategy, what I do, there is a WhatsApp number in the description. You can send me a DM in the WhatsApp. These were all the trades that were taken by me and my students in a span of single week. In this video, I will break down each and every trade for you guys. So the most important thing that is very very important for me is, and nobody SMC people or retail people don't even care about, the timing is very very important. You can see these silver boxes. These are very very crucial for my entries. The timing is first, the liquidity is second. Timing is always important. So I got these timings because we got access to the lot of technology and my students who do all the hard work and give me lot of hidden information. They do lot of hard work. My students, my team collectively do lot of hard work, and the coders in my team got back tested last 30 years of data. They back tested last 30 years of data, and we found that lot of volume is coming in these time zones. You can see, apart from these time zones, all the price is doing is accumulating the orders. You can see price is accumulating the orders, price is accumulating the orders, and the volume is kicking in these time zones. So these are the time zones where the money is kicking in. You can see here, high of the day is formed in this time zone, low of the day is formed in this time zone. You can see low of the day is formed in this time zone. Apart from these timings, all is liquidity. Simple, all is liquidity. These are not the ICT kill zones or anything. These are the special kill zones which were invented by my team, liquidity inducement theorem. So I will do the breakdown now, because lot of smart money people and retail people, the first trade which we took here is because of the liquidity. The first thing is we identified the liquidity where the money is. We'll sell here, will sell here. But after they got taken out, we know exactly all the money got collected. Transaction money is collected. So the move is pending. We enter the market from the market maker's perspective. We sell and we got easily 15 RR. This is the first 15 RR trade which made us 15% account gain in a single week. Same thing. In this day, we took a buy in the same timing. It mitigated this order block. We bought and targeted the Asian liquidity. Same thing. Timing is very, very important. And same thing. This is the previous day's internal liquidity. Timing is there, everything is there. I'm not showing my entry pattern here because it's only for the students who joined my one-on-one mentorship. Same thing, it got like 10% account gain, and this is the huge algo manipulation push where the algo specially uses these huge vector candles. They will print this type of candles to manipulate the brains of the retail people, because the retail people are, and the SMC people are seeing this huge speed and aggression. They will buy simply without knowing the direction or anything of the marketplace, and the smart money people will buy from here. This is the complete trap. So that's why this trap is taken out and we entered the sell at the top. Simple. This is how simple that trading will be once you understand the liquidities and the hidden knowledge. So this is how the trading should be. And if you wanna learn the exactly my trading style as my students, just send me a DM in the WhatsApp so we can set up everything. Peace guys. Hope you enjoyed the video.